What's going on, traders? Welcome to the Weekly Watchlist, where I do a technical analysis and give you some of my thoughts on the tickers up here on the left. So as always, we have our broad market, then we'll cover our core companies here. And the Discord members did vote on a new set of quickfire round tickers. If you want to vote for next week, feel free to join the Discord. It's completely free and linked down below with all of our other free resources in the description. I know it's Super Bowl Sunday, so if you're watching before the game, let me know who you think is going to win down below in the comments section. I'm going to try to keep it short so we can all get to whatever it is that we're trying to get to. So jumping into our SPY weekly chart, talking about candle structure and location as always. For structure, we've got a pretty solid bodied green candle, very little upper and lower wick. And, location here is kind of more important than actual structure, right? We're actually taking out the prior 2 weeks highs, and we did not even violate the prior week's low. So in my estimation, when you have same size body candles stacking up like this, you always want to go with the most recent price action, right? That makes sense. It's fresh in the mind of the market, and it's telling us the most recent sentiment. So, based on the weekly, there's nothing here showing me that we will continue lower. As a matter of fact, this candle is quite bullish, pointing to maybe some more upside. But if we look at the daily, right, this is where we can start to think about, all right, where are we in relationship to some key market structure, right? We made a new all-time high on Friday in a regular trading hour session, which is a good thing. Could that be the blow off top? I'm not entirely sure. We are certainly coming off of a very impressive move off of the support trend line. So it's one thing to keep in mind that we are slightly, extended from that 50 SMA. Now, that being said, does that not mean we can't continue higher? No, we absolutely could continue higher. But, instead of just saying blue sky levels to the upside, I would say if we see any sort of pullback this week, the first ideal spot you want to see hold is the breakout area at the 384.85 mark. Anything underneath that, and if we see more pullback, right, then you're looking at the 6-day balance highs as well as prior support, then resistance, then support. That's at 381, definitely a key area on the chart, and then a big gap in the chart, right? We talked about this in the midweek market update. It fills from 379.62 down to 377, the whole dollar just about. Remember, that is critical support here. And depending on time of week, if that is the situation where we do see a deeper pullback, that will coincide with 50 SMA as well as support trend lines. So definitely in my estimation, that will be a first touch buy, expecting some sort of gap fill reversal out of it. Now, I just want to throw the Fibonacci's on here to see if anything aligns with some of these targets. So going from low to high, right? So the 38.2 is that 381 mark that we just talked about. So any pullbacks that are above that, I would say, are the most healthy scenario here for SPY to continue on in the upside direction, but you have targets both up and down. Moving over to the Qs now, you can see that it's not quite as bullish because we didn't break out on as much strength. The candle isn't, clearly to the upside. We have a little bit more overlap here with the breakout zone, but I would say the same exact thing, right? Sort of a question mark candle, indecision up here whether or not we want to continue higher or pull back. If we do continue higher, again, probably want to see it consolidate above this breakout area here at 330.15 and then make a move higher into blue sky territories, whole and half dollars after that. If we pull back, of course, same sort of scenario here as in SPY, large gap underneath us from 325.42 fills down to 323.50. I would say, again, if the new money buyers are truly here in this marketplace, they're going to buy that gap fill and we should see a reversal. Just note, though, that there isn't as much support in this gap, the bottom of the gap fill, as there was in SPY, okay? So if this one comes down, fills the gap, and continues lower, just know that we have the support trend line as well as this prior breakout area, an area of support at 317.25, which, again, the 50 SMA, depending on time of week, could start to coincide with offering some super support here if the gap does, break and fill and then move lower. Okay, so that's probably the lower target on, for this week. If you look at the range of this, extreme move to the downside, that would be, something similar to that entire range right there. So we'll leave it off, but just know anything underneath, we'll just call it 312, and we talked about blue skies to the upside. Jumping over to IWM, Russell 2000 and our small caps, obviously this one is the most bullish. Look at how high it is in relationship to its breakout point. You can see on Thursday, that was the main break, and then on Friday, we actually filled the gap, which is a good thing, repairing that structure and, making sure that we're not getting too far ahead of ourselves. I would still say that there is a chance for some pullback here. I mean, look at this range here. It certainly could just go sideways. That would be ideal for some more upside continuation if we consolidated again. If we just put the fibs on here, here above the 38.2, which I think will give us plenty of room to the downside, right? Look at that, nearly perfect. If we pull all the way back into 215, the whole dollar, the breakout point, that would still be respecting that 38.2, in which case, that sets up a bull case for a move back over the high at 221.85, just about into new blue sky territories. Okay, so Fibs, great little tool there. 215 key support if we do start to pull back. Support trend line, let's just extend that to the right and see where that's going to be at. Again, if it happens very early on in the week, you could get a super support based on the trend line as well. If it breaks, though, this is your key area that you want to pay attention to. Right around the 208.50 mark is what I would call it. It was a prior gap. It filled. It then acted as support. Of course, we had that nasty day, but we sprung right back up above it. So I would say first that level and then anything underneath the 204.64. Keep in mind, again, the ranges here. If we look at something like that and do it similar, we're looking at a pullback into the middle of this chop. We do know that the IWM, when it breaks, if it breaks, can be a little bit more aggressive than others. So still, if that's the break that we get this week, you have the levels mapped out. And again, 204 makes for a nice downside target if the break starts to get really aggressive, right? If our internals are screaming hot red, saying down, 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 maybe the IWM makes it all the way to that 204. But based on the daily chart, again, probably consolidates sideways up here and then makes a move higher. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every single time a new video comes out. Jumping into Apple, you can see that our 138 is coming in as resistance once again. If that breaks, though, I do expect a revisit of our 145, so that's kind of the likely scenario. Keep in mind, we did hold on to a new set of higher lows, so the uptrend is very much still intact, okay? But one thing I would want to caution you of on the flip side of that coin is the fact that this could be a daily bear flag. And if this sort of area of support breaks, that very crudely drawn in support line, if that breaks, what does that set up? Of course, another bearish pattern here, a head and shoulders, where that is shoulder number 2, of course, forming a lower high from the all-time high. And a break of our neckline there, something like that, would set up a move lower in Apple. Now, do I think that's the likely scenario? Probably not. There's a lot of positive buzz around the name right now, especially with the Kia thing going on. So I would say, probably cautiously bullish as we head over that 138 mark to retest the all-time high. Let's keep going into Netflix. Again, going to try to keep this quick and the edit small. On this one, we are looking at, again, a daily bear flag that looks like that, but I would just sort of, preface that with the fact that we are retracing, right, a pretty considerable amount of that move lower off of the gap up from earnings. So we are sitting at the 50% retracement, which means, generally we're kind of at a key juncture, right? Do we continue higher or lower? Your key break is going to be at 553.13, just about. I'd just call it 553 the whole dollar. If we get some strong acceptance over that, then we're looking to recapture that 61.8 fib. I'll just throw those back on for a moment. And when that happens, the likelihood of retracing 100% of the move increase greatly. So again, 553 is kind of your line in the sand for more upside. A recapture, the 61.8, sets up the case for a 100% retracement to the downside. If we get rejected here, you're looking at key support below at 530.50. Let's move over to Tesla now. This one is, in my estimation, pretty bullish, right? The fact that we're just consolidating up here at the highs after a really explosive run to the upside. I mean, this pattern has played out over and over and over again in Tesla. Here's another one, right? Daily bull flag, daily bull flag. Back here, this pennant back here was a daily bull flag. I can't get any more data on the screen right now, but your key levels to pay attention to into this week, anything under the 840.75 mark brings us probably back down into this set of lows around 803.50. Inverted hammer on Friday, maybe that happens, not entirely sure, but again, probably want to see it consolidate in this range. To the upside, the 860 breakout point is back in play. Remember, we talked about that pressure cooker top there. It's still, in effect, right? If we can break over that 2-day high, looking for a snappy move to retest this kind of resistance in there around 885, and then of course 900, the all-time high after that. Blue sky territories above, whole and half dollars, not even half dollars, whole dollars, $5, $10, $25 marks here on Tesla. Coming into Alibaba, you can see on this one, right, the chart is still very sloppy. One key thing to note is that we tried to get a breakout over this pressure cooker top at 265.75, and it really was met with no acceptance, right? The buyers did not step in at all with any sort of true strength on the first go, so we're going to see, or have to wait and see, whether or not they try to do it on the second time. With this green sort of hammer that's slightly below the level once again, maybe we get a secondary break, but now right? There's more resistance that we have to clear to the upside. Of course, the high from Thursday is right around the 269.75 mark. Anything above, keep in mind, very poor structure. We have gap 1 and gap 2, which are going to act as targets to the upside. If we roll over, again, probably just looking at this area on the chart for now. Strong support, 50 SMA and 200 SMA at 252.78. Let's keep going with Facebook. This one, a very small little pressure cooker top is forming in the latter part of this past week. We talked about this in the Discord, and we're waiting for that to break. That's going to be right around your 269 the whole dollar. If it breaks, of course, 50 SMA is right above on the daily, but that would be a nice quick intraday scalp. To the upside after that, you're looking at the 278.82. We're stuck in kind of this range. Remember that we've been doing this in Facebook, kind of playing around here. This was a massive break before earnings, then it sent us right back up, after earnings. So I would say probably looking at no more than 278.82. Resistance trend line will be there as well. Depending on time of week, we saw a compression of range this past week, so not looking for anything crazy here in Facebook. To the downside, if we break the 264 mark, again, that's your key support. Look at all the times we've touched it in the past. If we break that, we're probably headed to this double bottom here around 255, we'll call it the whole dollar. Moving into NVIDIA next. Earnings are still a little bit further out on this one. They're not even this upcoming week, so not something really to be concerned with yet. Again, nothing to really do here. We're stuck in this range. You can see that we have a few tests trying to break it. 1, 2, 3, 4. We are still hanging out towards the upper end of that range, so I would say we really need to break the 558.62 mark before there's any clear advancement, right? We keep getting rejected there. Huge inverted hammer. Now we're seeing a little bit of red. There is this intermediate support here where the 50 SMA is kind of just, causing some chop. So watch out and be careful around that 533 mark. It could cause, again, some chop, and you don't want to get caught up in that. If we pull back, I'm not necessarily confident in that as a support, probably more confident in the 515.50 mark. And we'll move over to Microsoft now. Here, chart looks absolutely phenomenal. We're holding up at these highs. Again, the consolidation up here is beautiful. Some, a double hammer on Thursday and Friday. Clearly, right under a breakout level at the 242.58 mark. Of course, if we break, we're going to have to contend with the true all-time high around 245, but it still looks good, right? That's a very, very nice intraday trade there. A nice scalp over those 2-day highs into the all-time high and then monitoring for continuation after that. I would say your key area of support are the double bottom lows from, again, on Thursday, Friday. That's at 240.40. Anything underneath, again, you can see the ranges in here are pretty large, but it looks likely, right, that would be a failure of the bull flag to materialize, might come back down and retest this area at 231.15. Let's wrap up our core companies with Amazon now. Obviously, earnings came out, caused the stock to gap up, filled the gap 100%. Now it's just kind of sideways in the range. Again, not really a clear picture on what to do here. This was a very strong area of prior resistance. Again, no acceptance above, right back down below. Now we're kind of at it again. So now that we've already broken it, again, the strength there is not going to be as clean. The move won't be as clean. We have to contend with this 34.30 mark now. Obviously, Friday's high is also going to be an issue. So, it's okay. We are still forming the higher lows, but in terms of clear trade setups, not really anything in Amazon quite yet. Obviously, you have the levels mapped out for you. To the downside, we'll just talk about briefly the 32.50 mark. Anything underneath, probably the 3,200 round number, as well as 50 SMA creeping up slowly. So keep that in mind. Any larger breaks on Amazon, which again, I don't really anticipate, but we have 30.78 down below as well. Kicking off the quickfire round with PLTR. This one's kind of interesting. There's two things I want you to know. Holding on to prior resistance as support is a bullish thing, but if we check in on our Fibonacci's off of this most recent move to the upside, we've clearly violated that 61.8 retracement, which is a bearish thing. So until we actually see some consolidation into a pattern, whether or not it's a triangle, a rectangle, basically what we're looking for is a clear sort of price level that's going to cause a breakout or a breakdown. Until that happens, just kind of neutral here on PLTR. We'll come into Peloton. This one, again, earnings were on Thursday. We formed a hammer candle on Friday off of key support. 50 SMA is providing some support as well just below. I'd say if we can clear once again this 150.50 pressure cooker top area, we would revisit the high of Thursday and then move into this area here, 164.40. Not really seeing any reason why we would move lower, but know that there's support below at 139.10 and then 125.50 just about based on some prior highs in here. Let's move on to TWST. This one's cool because it has a secondary trend line and a primary trend line. I would say the secondary trend line is likely to break. Why is that? Well, we obviously saw a massive gap down on earnings. We formed an inverted hammer candle, and most importantly, right, we're coming off of a lower high. We also have massive volume down below, so no love for TWST over this 170.13 on Friday. So I would expect it to break. If it does, your target's down here at 130.77. Anything after that, again, depending on time of week, you're looking at primary trend line, which I would expect to hold as a first touch bounce. Again, to the upside, you need to clear 170 to start to fill the gap, which is going to be at 189 the whole dollar, but doesn't look like a likely scenario as of now. NEO here is an interesting one. There's kind of two takes on this one, just like PLTR. First one is that we're forming a daily bull pennant, something that looks like that. This is my sort of favored scenario, and why is that? Well, technically, we had a gap in the chart, and it did fill. We touched that gap fill area on Monday, Tuesday, and Wednesday, and now we're back above the 50, let's call it 56 support level. So if we break the resistance trend line, I'm looking for a move higher into the 64.32 area, and then all-time high after that. If we break, though, probably you need to see strong acceptance underneath now the gap fill area as opposed to just the 56 whole dollar. That's around 54.40, okay? Qualcomm, this one was absolutely destroyed on earnings. We have a massive gap left in the chart above us, but keep in mind there's also a massive gap left below us from the prior earnings cycle. So as of now, I don't see why we wouldn't continue lower on, on Friday. We took out Thursday's low, which is a bearish thing. So I'm looking for key support to first be here at this triple bottom from the past at 142. Anything underneath obviously threatens to fill the gap below. To the upside, your gap above fills from 151.82 up to 161.66. But again, is that, it doesn't look quite likely based on our candle structure in here and large red volume down below. Let's keep going on with MGNI. This one, again, you have a primary and secondary trend line. So here and here, looks like we probably at least want to pull back into the secondary trend line. As you start to get further and further away, we've talked about parabolic movers in the past, your risk for pullback just increases dramatically. So large gap in the chart. Obviously, earnings are coming up down the road, not a concern as of right now, but the gap fills underneath 49 the whole dollar down to 44.34. And again, that will probably, depending on time of week, coincide with a move into that secondary trend line. I would expect it to hold this time because obviously we're coming off of all-time highs, but if it doesn't, we're looking for a move lower into the primary trend line, which could coincide, again, and depending on time of week, with a prior area of support at 34. That would definitely be a buy in my estimation, but until that happens, again, playing it by ear, probably want to focus on this gap first. V for Visa. This one looks phenomenal. Again, we're talking about buying it in the Discord somewhere around here, around 200. Of course, it did move a little lower, but again, nice move here, and we're consolidating at the highs on Friday, back above that 50 SMA. I don't see why it wouldn't complete the move all the way back up to 213.12. Anything after that, and we're looking at the move into 218, and 220 is the all-time high, right? So looks good based on this move here. We are retracing a considerable portion of the down move. Let's throw the Fibonacci's on there just to see where we're at. Again, we're at the 61.8 Fibonacci as of right now, and when we recapture that, as we've talked about throughout this video, the odds of retracing 100% are greatly, again, dramatically increased. So that's something to keep in mind here on Visa. Looks good for more upside. Target, this is an absolutely beautiful chart. I've been long Target in some of my retirement accounts for quite some time, and it just moves, like perfectly, right? We see a move up, we see a controlled pullback. You always buy the pullback in Target, right? Move up, pull back, move up, pull back. And, again, I won't lie to you, I bought some more Target here on the pullback. We're going to see if we can defend that support trend line. It looks like we may, right? We're coming off of a high, which is a higher high, as you can see there. So we're going to watch for that to hold, looking for a move back up to 200, the round psychological number, and all-time high. If the support trend line breaks, though, we want to see it go sideways and kind of maintain above 180 the whole dollar. SBUX is up next. This one, there is a gap in our chart. This one did make a move all the way back up to our all-time highs here at 107. So I would say it's kind of ready for cooling off, right? You want to see it consolidate up here sort of towards these highs. If we have the Fibonacci tools up, we may as well use them. We want to maintain above our 103 whole dollar, okay? That's the 38.2. That would fill the gap below, which is a good thing, repairing that structure. If we can hold sideways, do something like that, boom, your breakout is likely to happen over that 107.75, 108 whole dollar. That would be a nice daily bull flag. To the downside, your support support is at 102 if the 103 fails from the fibs, and anything underneath is at 96.52. Wells Fargo is up next before we go into our last company. This one's pretty choppy, right? I don't really feel comfortable giving a direction on this one. We're kind of smack in the middle of range, right? We're not really, I guess we're kind of towards the upper third, but again, really choppy price action in here, and I'm not really, again, going to try to cherry pick an area of support or resistance in there. I'd say either wait until we move all the way into 34.25 and then maybe take a fade off of that area, or if we continue lower, again, looking at key support here at 29.73, anything underneath is at 28.50. I'd just watch for something like this to form, right? We always talk about bull flag formations. If we consolidate somewhere in here, form a set of lows, you watch for that to hold, and then take the break over the highs or area of resistance that forms, okay? Lastly, we have Lemonade, cool picture here, chart, because, I mean, look at all these touches, right? Very, very compressed range, continually testing the same area at 141.16. I would say, again, starting to feel a little bit more like a flush point, but one thing I can't, sort of ignore here is the impressive move to the upside. So again, is this just consolidation? Let's throw our fibs on from sort of low down here to the high. Obviously, we're holding up well above the 38.2. So I'm not trying to be bearish about it, but it is turning into a flush point there at 141.16. I don't think it's the end of the world if we flush a little lower into that 38.2 at 132. You can see it actually coincides with some prior highs quite nicely, looking for that to act as support. And then, if all of that materializes and we move back higher, your break is above 155 the whole dollar to potentially send us to retest all-time highs. So that's going to be it for this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, feel free to let me know down below in the comments section. Again, let me know if you're watching this before the Super Bowl who you think is going to win. And with that, I wish you a green trading week.